Hi, Kish.
Hi.
I don't know which link he has used because I can't. Peter Maich is telling me he's waiting to be let in the meeting. So let me ask him if he's. Let me send him this new link. What we are currently using because I don't know which link he's on.
Okay.
Hello.
Hi, Peter. How are you? Hello. Can you hear us?
Speaker.
You're muted.
Is that better?
Yeah, now I can hear
Am I
you. Now we
muted?
can hear you.
I
No, now you're
shouldn't
good.
be.
Now we're good to go.
Am I still muted?
No. Now we can hear you. Can you hear us?
Yeah, I can hear you good. Yeah, I was on for some reason I had a Google Docs link and one of the sitting in notifications. I was sitting on that one. So are we all
Okay.
good?
Yeah, I think we're good to
Yeah.
start.
Yeah.
So with me is Faith. Faith is our co-host for today's meeting.
Hi.
So
Hi,
yeah,
Peter.
yeah, you guys can say hi to each other, then we can start.
Oh.
Hi,
Ah,
Peter.
hello there, Faith. How are you?
I'm good.
Good.
Excited to have you here.
Yeah, thanks. It's good. It's nice to keep the link going, and I've had a bit, I've progressed a bit in the last year or two, so I think that's useful for people on the journey on the way up.
Okay.
It's good.
Yeah. Okay, guys. So I think we had spoken to Peter in a few times before on our trading lounge. So Peter, I think for today we'll have more like a live practical session of your last 6 months of trading, as we had spoken before, and then I think I've given you access to share screen. But we last spoke to you in April of 2020 during COVID. So maybe you can tell us, has your trading changed in any way? Have you added the instruments that you have been trading? And what are those instruments? And just give us like a brief of what you're currently trading.
Okay, so in some ways everything's changed, and in a lot of ways not much has changed. So I'm still using as a base Dan Shapiro, Access a Trader and his webinar, his daily trading room, and I'm still trading the big high tech stocks, Microsoft, Tesla, NVDA, Google. I've still stuck with most of those stocks for the day trading and potential overnight holds if the market's okay. They still, again, the big names, they provide a lot of liquidity. You can get in and out on a whim. You can trade size if you choose to. And they're driven by news. They also act as a group. They tend to support each other. So they're quite good, quite a good bundle of solid stocks to play around with. They're good. Um, probably the biggest things that I've done, and since then, a while back, I had a good week-long session with Mandi from Trading Psychology Australia. I think Mandi's been on your show before,
Yeah.
and Linda Rashke. They put on a good week, and I had a couple of individual sessions with Linda and Mandi after that, and it not changed my views on how I was trading, but it cemented a few of the things that were, say, exclusively me. Took me away from following other traders, following someone else's style, which gets you so far, but it can also induce quite a decent bias that if you're not aware of it, you can hold you up. Since then, few changes. I've had some very good progress. I think my main account's up over 150% in about 3 months, and that was around backing myself, treating the trade slightly different risk profile, and really starting to find my own style within the trades that I was doing. So it's been pretty good. Just hope it
Right.
keeps up.
Okay, so you're sticking to the major stocks, major US equities.
Yeah, they're the easiest ones, like at the moment they've been driven crazy. They had deep dive, the AI news that came out yesterday, and any of the AI stocks crashed. They plummeted. So they're very, the crowd reactions are very emotional to them. Um, I'll go through. I took a decent loss yesterday, which was the plan. It was bigger than I wanted, but the plan was to get out of a trade. But they dived down yesterday. They've consolidated now. We've got earnings this week with Tesla. We'll see what it does. But those stocks are kind of split now. Two or three of them are down today. Meta and Microsoft have gone back. Apple have gone up. So within that bundle of stocks, they're wide ranging. They react to news. They tend to split up like congregate like a crowd and then disappear at times, come and go. So they're very active stocks and they're very, very good to trade. There's always a
All
good
right.
daily range. You just got to learn to manage your risk.
All right. And you're very passionate about deep sea fishing. And so maybe what comparison would you give to trading and deep sea fishing? Because you're very passionate about both and you've remained consistent even at your age. So maybe you can touch a
Yeah,
little bit on that. Yeah.
they're both very, very frustrating. They're very frustrating, and they both suit introverts. Trading. I've got a business, and I've got a decent business, and I deal with an awful lot of people on a daily basis. When I'm trading, I say I'm a professional extrovert. I need to perform. I need to talk, do what I do. But by nature, is introverted. And when I'm trading, it's me and the screens. I love it. Fishing, deep sea fishing, and what I do now, the recreational deep sea fishing, it's much the same. We've got good electronic equipment. We've got that on the boat. We've got some of the latest high-tech equipment for finding and catching fish. We've got that with our trading platforms, our analytics for our whatever that we do. We've got all the electronics that we need. We need to find the grounds. My grounds are those high beta stocks, high-tech stocks.
Mm-hmm.
When I'm fishing, I'm 60 miles offshore. I'm looking for a specific area to catch a fish. When I get out there, I need to understand the weather patterns, all the little bits that make it up. The weather is equivalent to the environment that we have within trading. The weather patterns at the moment can be what I'm calling the Trump effect. Everything in the US is, everyone fell in love with Trump for a day and the market went silly. And then they thought about it a little bit, and that's all great, but there's tariffs, there's all sorts of things that are occurring that'll affect the market in different ways. So that love affair's over now, and people are looking for the dust to settle and find a direction. Fishing's much the same. You've got to understand the grounds, you've got to understand the weather, you've got to get out there. I could be fishing next to you, I'll catch fish, you won't. There's that, there's that. It's that specific. So a lot of the conditions around being successful are similar for both. They're both very frustrating too. You can also, just by sheer luck, be in the wrong place and come home with no fish.
All
So
right. And now that
it's interesting.
you've mentioned
Yeah.
Trump, and so like, did you trade through the 2024 US elections and also during the inauguration in January of 2025? Or is your trading style price action based? Then yeah.
Yeah, I did like one. You have to, regardless of anything. If you've got to trade through it because it's a big news event, and if you're not confident, trade small. Trade that small that it doesn't matter, but be in the game. So Trump, I traded through it. It's all price action based on levels. Breakouts, breakdowns. It's very, very easy. And with Trump in there and the emotion surrounding Trump, and he polarizes people, it was very good. But it's also back to how it was last year. It appears to be a fast market at the moment. Not holding overnight. Respect the levels, respect your stops. You've got to make some reasonably quick decisions to stay in the game, or you'll soon be $2 or $3 on the wrong side of any given trade. So traded through it. It's good, but you just have to understand what you can't do and be aware of the news in any potential news that's going to come out that may affect it. I don't dwell on the news too much, but in my daily homework, I make sure I know if something's going to happen, and it may just mean don't touch that stock, don't hold it overnight, and don't touch it in the first 30 minutes of trading. You're likely to get hammered. Just let the dust settle and see what direction it wants to take.
All
But
right.
Trump's been good. All the presidents stimulate the market one way or the other.
Yeah. So you can now share your screen, but before you share your screen and take us through maybe your last 6 months of trading, you can tell us if you're a swing trader. And Faith also had two questions for you. Then you can share your screen and then we can go through like the live chat examples.
Yeah, so what I'd probably say is I've got three styles of trading. And one is a short-term trading, which is, you on the day you might be in a trade for a minute, 2 minutes, 2 or 3 hours. My time frames, I'm up for a couple of hours in the morning, back to bed and up later in the market because of the New Zealand hours. So short-term trading, which I like, and it runs hot and cold. If you get that wrong, you lose money fast. Intermediate swing trading, which is 3 to 5 days, 2 to 3 weeks. You might pick up a hot sector like all the chips, semiconductor chips. You might take some of the second tier ones that are slightly slower reacting, hold them, and then longer term. I've got two good trades long term, which I've basically put in the bucket. You can get reasonably large P&L swings on those, and I've just left those ones on. I just suck up those big, not the big losses, but the wide ranges for the future. I'd like to hold those for 2 or 3 years. So three styles of trading. What came out with the time that I did with Mandi, the one-on-one coaching, was developing my own style. I follow another trader. We use his style predominantly, and it works. And then we're talking that I'll come down at 6 o'clock in the morning to make a coffee, see what's going on, and I'll look at the charts. If I like the patterns, I'll be fully loaded up. I'll max out in 2 minutes. And that intuitive trading, where I just like it and get into it, was kind of the catalyst for change, but with taking more ownership of how I want to trade and how I see the market. And so we just strip my trading back to something a lot simpler. So that was a very valuable session to get some insights in my own mind,
All
which was
right.
good.
Yeah, I think now you can share your screen and then you can take us through like your most recent trades.
Yep. So where's my screen sharing? Share.
There's a green
Right.
icon at the bottom called I've given you access to share screen.
Yeah, I think I've got that one. So um can you see that?
Not yet.
But yeah, let's have a look. Try that one.
Yeah.
Okay, so I'll come. Yeah, good. So what I've shared the wrong screen. I'll just put that back over there. So we can see that screen now.
Yeah.
Yeah. So this is one of the longer term trades. I'll start with that one. This is Rocket Lab. So Rocket Lab is one of I think that the space sector in the States now is quite hot. Yeah, you've got about 12 stocks that make it up. And you've got within that space sector, you've got the stocks that basically take payloads, near Earth orbit, or they want to go to the moon. They're involved in potential Mars exploration. And Luna and Rocket Lab are the two stocks in that sector that I quite liked. So this is a longer term chart. This is a weekly chart on it, and I started way back here about 6 months ago, 5 months ago. I've taken about a 5,000 share position on it. It came down. You see it just based out for a long time. I'm quite happy to hold this one pretty much for years. It's gone up now. It's got a decent profit, but you see on the weekly, it's just basing around this level here. It's probed higher. It's come down. It seems to be holding above the highs from 6 months ago, and I think it's just a very, very good long-term stock. It's got strong revenue growth, government contracts. I think there's a $3 billion multi-year Olympic contract where they won't get all of it, but they'll get a share of it. They've got some technology that's proprietary technology that's theirs. A lot of diversified services. They're looking at more efficient rockets, more efficient payloads, NASA contracts, and the sector is just growing. So on that weekly chart, you can see where it started, how it based for a long time. It's on the way up now. Come back to the daily chart. It's never really broken any of the lows when it gaps up through there. It holds through there. It's gapped up and held there. Consolidated a wee bit, and it's kind of wanting to push up through new highs. So that's a long-term trade that, as I said, I'm happy to hold for a couple of years. The partner to that one is Luna, which is much the same. It's probably acting as a meme stock back there. It went up, some pretty excessive levels, but again, same pattern. It's pretty much come off those highs from about a year ago, based out for a long time, and you can see it's just starting to make higher highs, higher lows, and it's holding all its ranges. So that one there again is much the same. NASA contracts. It landed on the moon. That it had that satellite, that probe it put on the moon a while back. It's got some more upcoming missions. And they've got a contract for near space communications with NASA, which is a solid government contract. And this one again, it's just the daily charts. As you can see, it's just basing its way higher and higher. So I think that space sector is very active, and I think it's an emerging sector that should have some good stocks and some good rewards in it over the next year or two. There we are. Oh, here's a wonderful one. You can see this chart, the screen, all right?
Yeah, we can see the earnings.
Don't hold through earnings. This is Microsoft, and this is me holding through earnings, and this is a few months back. This was a disaster, not wanting to get out, finally having to cut the trade down there. That was a decent loss, but the biggest things I've found in my trading is not what I'm doing right, is just to get rid of 2 or 3 things that I'm doing wrong. And holding through earnings, holding through news events, trading around news events, you can't hold overnight on them. So you can see, this one I should frame and put on the wall. It's what I call a decent disaster. Financially, it wasn't a big loss, but it was just a very, very silly thing to do. So by removing 2 or 3 bad habits, if you like, I've it's made a considerable difference to the trading P&L. These are just messy day trades. When you're not on the game, getting in at the highs, not getting out, holding, trying to short, not paying attention. I think you've got to give the stocks the attention they deserve. And sometimes with the hours I work, I get quite tired. And there's times when I shouldn't be trading. That's another thing for me to be aware of.
All
And I
right.
think
All right. Can you maybe you can take us through a chart of NVDA or any other stock that you have recently looked at
yeah.
in the last couple of months?
Here. So you can see this chart of NVIDIA.
Yeah.
Yeah. So I'm not trading this at the moment. I've traded an awful lot over time, but it's you can see the news here from Deep Dive yesterday, the announcement that came out with the AI and Deep Dive, using 50,000 chips instead of 5 million chips for their AI intelligence software, and NVIDIA obviously plummeted. A few of the other ones did the same thing. So we won't be touching this one again until it starts to break these highs. It starts to recover, which it could do that very, very fast. But as far as the stock goes now, lows down here, if in the next day or two it were to come down and break these lows, or I'd be looking at a short on it, and I won't be looking at a long until it wants to try and fill this gap. So it's a very, very simple trading strategy. We're just looking at breaking out on the highs, breaking out on new highs, breaking out new lows. You're really looking for fresh sellers and fresh buyers to come into the stock. With the 5 or 6 main stocks, there's normally an opportunity every day.
All right.
But, we can see what Meta's gone and done in the last couple of days. Meta did the same thing. It had a gap down yesterday, but the difference being that Meta came up, broke the first 60-minute high, broke the prior day's high, and that's all good. Just shows some interest in it. But you can see again today, it opened up above yesterday's high, and it's running up quite nicely. You know, I would if I wasn't on this webinar, I would have looked at a trade off this one this morning. But you can see the difference in the two stocks. Meta had the washout, but it's gone and filled the gaps, and it's continuing higher. NVDA is still suffering from the AI news from deep dive.
Mm. Okay. Thank you so much for that illustration. I think we have gotten a grip of how you do your trading. And guys, Meta is former Facebook, for those of you who are recent beginning traders. And so I think, Kish, you can unmute yourself. Kish had some questions that she had taken from the trading community. So I think you can highlight, because I think the first one has been answered. You can ask Peter from the one that you had if he uses indicators and whatnot. Yeah.
Yeah. So I'll just go back. Where are we? Don't know where my screens are now.
So a few questions that came in. One of them was, what indicators or tools do you rely on mostly on in your analysis?
So what indicators?
What indicators do you rely on mostly or in your analysis?
Okay, I'll go back and see if I can bring up. So primarily moving averages. So I'm looking at the 60-minute highs and lows off the open, looking for momentum and strength. And we're looking for longs above the 50-day moving average. It's very, very simple. If it's above the 50-day moving average, it's reasonably strong. If it's below it, it's reasonably weak. And it's a very good stop go indicator. Don't bother going long if it's below the 50, and don't bother going short if it's above the 50. It seems to be it's very, very simple. I've cut things right back. You can overanalyze, and what I'm wanting to do is flip my trading, which I've done the last few years, from analyzing to trading. You've got to hit the button. You've got to be in the game. You've got to learn to get in and out and back yourself for short-term trading. The more lines you put on the chart, the more moving averages, the more indicators you use, the more you give away responsibility for the trade, and the more you build a subconscious bias that stops you actually hitting the button and acting. At the end of the day, it's just hitting the button. Yeah, there's days when you want to be actively pushing the button, and there's days when you want to rip the enter button out of the keyboard and not use it. So 50-day moving average, 10-day moving average, recent highs, recent lows on any given time frame. And for me, that's a 60-minute. That's a combination that is simple enough to find plenty of trades. It's simple enough to manage, and it doesn't put too much bias on the charts.
Yeah, understood. Kish, you had some few more questions for Peter.
Yeah.
Yeah. Okay. How do you adapt your strategies to the ever-changing market conditions?
How do I adapt? Oh, I take my medicine, have a look at it, just think about it. You can only react to it. The longer term holds, like the Rocket Lab and Luna, they can do what they want. I can close my eyes on those ones. They're done. The shorter the trade, the more active you need to be. I say it's like cooking a steak. You put a roast in the oven, you can set the temperature, and you can leave it for 3 or 4 hours. You're cooking a steak, and there's about 10 seconds between medium rare and ruined. So the shorter the time frames, the more attention you need to give the stock, the more active the market. If you're trading a hot sector with a lot of emotion in it, the more active the market, the more you need to give it attention. I can leave the screens to go and make a cup of coffee, and it's probably can cost me a year's worth of coffee if I'm not careful. So you've short term, you need to be engaged, you need to be active, you need to back yourself, and you need to be able to hit that button. You've got to be able to hit out of a trade. If you can't do that, you become a victim of yourself. It's so cliches, but it's protecting what you've got. You've got to get out at break even, and you've got to understand the market. Another big change I've made is simply identifying an up day or a down day. It sounds so simple, but is the market going up for any given instrument or any given sector, or is it going down? And if it's going down, don't trade it long. And if it's going up, Don't trade it short. It's extremely simple, but it's very, very hard to do. But it's conditioning your mind to see what's in front of you, not to see what you want to see, not to analyze it to the point of seeing what you want to see and being on the wrong side of the trade. You can't, you just can't beat that. If you're on the wrong side of the trade, you've got trouble. And at some point, it's going to really hammer you.
Yeah.
That's,
And Peter, as we wait for Kish to also finish her questions, maybe you can tell our members who will watch this later the importance of plugging themselves in a trading community. You mentioned you attended a session facilitated by Mandi and Linda Rashke. I think that was late last year. And just because trading can be a bit lonely, it's just you and the markets and your casa.
yeah.
So, yeah.
The session was it was a week-long session, so there were 2 8-hour sessions and 4 or 5 2-hour sessions during the week. They were very, very good. There was a nice balance there. What I wanted to, like, it's the first training I've done for years, and I wanted 2 female perspectives on it. You can go to a trading room and so much of it is male, it's male orientated. There's a certain culture and mindset, and that's fine, it works. But I wanted a balance to that. So to have 2 females presenting, and one is a psychologist trader and one is a trader, was brilliant. The week it was good. There was a good small group in there. There was an awful lot of good content, around trading psychology, and individual sessions at the end of it. What it did, it gives you a slight sense of belonging. It tunes your mind into it. We all get our ideas every so often. We need a reality check. Mandy's very, very good at what she was doing. I got a lot out of that. I think that basically what I got from the one-on-one session was permission, as funny as it sounds, to do the things the way I feel. You follow someone and you feel a loyalty. You feel a loyalty to a moving average. You feel a loyalty to a person, to a technique. And yet a lot of the times I trade counterintuitive to that, so there's confusion. And the simplest thing I got out of it was permission to be myself, as funny as that sounds. And from that, you're on the right side of it, and you start trading and actively trading around what suits you. So it takes the confusion out of it. Linda's very analytical, intuitive, but very analytical, and she provided a lot of good basic structure, a lot of good reading materials, to study and go through. So that the whole week was a nice balance, and gave me a sense of belonging to something, which was nice. As you say, it's quite lonely. We sit here in front of screens,
Yeah.
and we push buttons. And
And when it comes to the resource materials, which trading book have you read recently that you would recommend to us?
what I've done for that one, it's, if I can share the screen again. So
Yeah.
just which one? Okay, can you see that screen there?
Yeah.
Yeah, okay, so I've got up here, so I'm not so much trading books. What I do is I belong to Scribed, and it cost me about $8 or $12 US a month. And you can see this is just one small selection of trading books. There's a bit of other work stuff in there: Soros, Stock Operator, How I Trade, Jesse Livermore. There's something like 400 or 500 books on there. On that for $8 a month. Trader Mind, High Performance Trading, Bulletproof Trader. Everand is much the same, Stock Market Operator, Traders, Wyckoff Gann. So what I tend to do is I've got a subscription which gives me access to literally hundreds and hundreds of trading books. I don't want to study a person. I'm more interested in how someone thinks. I don't care what they've created. I'm more interested in how they think. How did they get there? And I tend to browse the internet. If someone mentions the name of a trader, I'll find a book. I'll speed read it, and I'm just looking for things of interest. I'm not looking to study and be like someone. I'm just looking to speed read through a book and just see what may be of interest. And I find for me that's the best way at this stage of my trading to get information out of it. There's another gentleman, David Paul. So David Paul's name came up somewhere, and I googled him. I ended up on YouTube. He's got awful lot of videos on there. Some of them are good, some of them not so good for the way I think. but there were a few gems in there. There's some incredible lectures, short lectures on position sizing, which opened my eyes to a few techniques. And there's a very, very good one on psychology. And at the end of the day, one of his videos is talking about pretty much 20 trades. And if you want to change a habit, it takes about 20 trades to change something, and I've defined a rule now as an outcome. Instead of saying I have a rule and I want to do this, I say here's an outcome, and that's a desirable outcome. And I treat it as an outcome rather than the rule. I don't like being told what to do. So if I've got a rule, I tend to not obey it. But if I've got an outcome, I tend to work towards it. And an interesting comment on discipline from him was, when you first start to change a habit, create a new outcome, there's a bit of discipline involved. But when you get there after, say, 12 to 14 of 20 attempts at changing or that pathway to changing, the discipline is not required. And it's a really interesting insight, because traders talk about discipline all the time, but the reality is you don't need discipline. When you get there, it doesn't exist. It just becomes something that you do.
Yeah.
So what I tend to do is just Google names, look for information. I think recently I hurt my knee. I was on the couch for 3 weeks, and I think I read maybe 7 or 8 of these books. I just speed read them because I had nothing else to do, and I just picked out names and gems. So it's more of a total immersion in things that interest me than being dedicated. But I found Everand and Scribe to be an incredible resource for very, very cheap books and lots of reading materials.
All right, so I think you will write to me the name of that subscription site for all the trading books, and then I will plug it in on the show notes as this webinar is being uploaded. Yeah.
I mean,
Yeah.
I was buying these books in the past for $50 and $60 each. When we can get them in New Zealand, and now for a very cheap subscription, I've got hundreds and hundreds of them. And there's in any subject you can ever imagine. So it's an incredible resource. I use it professionally. I use it for work as well.
All right. All right. So I don't think I have any more questions, unless Kish, you have the final question.
I thought I did, but I feel like, Peter, you've answered most of my questions.
One of my habits.
All right.
Yeah.
So
I am
what would be
satisfied.
okay. Then Kish, if you don't have a question, I think Peter can tell us his trading takeaway for 2025. What is like your market outlook? What are you anticipating now that Trump is in government, and we do know that he has some level of influence when it comes to the volatility and everything else.
I think it's going to be a good trading market. I really do. I think there's a lot of noise and posturing at the moment. And so a lot of noise and posturing, and the market's reacting to that. But Trump seems to want the US economy to flourish.
Yeah.
And so at some point there should be some stability, from this big quagmire we've got at the moment. There should be some threads of stability come through, and there should be some sectors that may push. Road transport should start to pick up if he can do something about oil and fuel prices. Manufacturing should pick up. So I think it's going to be a fast market to be careful of for short-term trading in the next month or two, maybe. But I would be expecting a directional market within 2 months, and potentially a stable, if not upside to the year for the US economy. This is what we're hoping for. We'll trade the short side and the long side. I'm not bothered by it. But what I would like to see is a stable market where we can take overnight holds. It just makes life a lot easier. So, but either way it's trading, just enjoy it, Hit the button. Hit the button.
All right. And now, as we conclude, we're having this we have an event calendar for 2025 where all our webinar guests, we will send them invites depending on the sponsor broker. So would you be open to a physical trading workshop in Nairobi, and everything will be paid for by the sponsoring broker? And then you can come and do a trading workshop, and people will get to see you. People only see you on the screen on the trading lounge, but it would be nice to actually interact with you in person.
How can I say no to that? If I can add value, yes, of course I would. I would love to attend. Yes.
All right.
Yeah.
All right. Thank you so much for your time. Thank you also for being our first guest for 2025. We look forward to also meeting you in person very soon. And we'll be in touch on email and on contacts here. Thank you so much, Peter. Kish,
Yeah.
Kish, you can say your goodbyes.
Thank you. It was such a pleasure meeting you. Looking forward to seeing you in person very soon, right?
Yeah. Yeah. Cool.
Okay.
Hey, you'll all take care and reach out anytime, eh? It's yeah, thanks for putting me in the community. That's what I'll say. It's as you said before, it's so much time in front of the screen. So thanks for the reach out and thanks for making me part of your community. Love it.
All right. Cheers. Bye.
Bye.
All right.